Okay, so here we go. Trading it's tricky. It's very doable, and you need to really just focus in on all the little intricacies. And I'm hoping that in this training tutorial, this training video, but to give you a good understanding of what it is you need to do, and how you can achieve a situation where you can effectively just work for yourself by day trading. A lot of people always say about how much risk is involved. Really, it comes down to how you learn to trade. Because when you do any positions in day trading, you're always going to have a stop loss. And the amount of money you set in your loss is going to be determined by how big an account you've got. So if you've got £10,000, you might want to risk 1%. So you don't want any more than £100 on your stop loss. But we're going to get into all of that. So really basic stuff. First thing you're going to need is TradingView. You can have this on your phone, your computer, your tablet, whatever you want. What we use this for is basically our analysis. So what you can see in front of you is probably like Mandarin at the moment, but it's going to become clear. So we are, if you look here, on the gold US dollar chart, which means that we're trading the price of gold against the US dollar. To your right hand side over here, this is your price. That's per troy ounce. That will cost you whatever the level is we're at. That's how many US dollars you need to pay to own 1 troy ounce of gold. And what we basically are trying to do here is predict whether this market is going to go up or if it's going to go down. It sounds simple, sounds easy, but obviously if it was, everybody would be doing it and there would be no money in it. So when you look at this chart, you're going to notice the candlesticks. Now I've changed mine from green and red to green and black because I find that the red, it can trigger a stupid response in the brain to feel fear. So I don't want that. I don't want to be deterred from what I'm trying to achieve here. So when we look at this chart up here, we can see we are actually on a 4-hour chart. So you can have this chart set to any interval more or less that you want. And when we trade, the way that I'm going to teach you, which is the PKM model, precision kill zone, because that is how you sniper entry, fucking rinse them for everything. We do what we call high time frame analysis. So this will be on the 4-hour, the daily, the 1 hour. We then scale back down and we'll go into the 15 minutes. And then that's where we'll find our sessions for entering, which we'll get into. This is just a brief overview. So expect there to be questions in your mind. Continue on and we'll find all the answers hopefully. And we scale down to 5 minute. And then when we get to looking at getting into a trade, we want to be doing the 1 or 2 minutes charts. Now, these numbers, these time frames, all that means is this candle here, this black candle here, that is a 4-hour time frame for this candle. So when it started trading, it opened at a certain level, and in the course of 4 hours, it moved up, it moved down, it did whatever the price did, and then it finished, and then it started a new 4-hour candle. So the black candles are bearish candles. That means that when the price opened, which you can see here, the screen stops spazzing out, it opened here, and it failed to close above this level. So that meant price came down. Now, in the course of that, these wicks have formed. Sometimes they have on both sides. Sometimes it's just a little wick. These are going to be indicators that we'll get into that tell a story. They say the candles tell a story, the wicks do the damage. So what happened here, essentially, the price action went up and down, up and down, up and down, but it kept going down. It got down to this low part of the wick, but it didn't finish there because price came back up. And the bottom of this body, and this candle, is where price ended. So it opened here, it closed here. Same thing with the green candle. It means price opened there, the bottom of the candle. It went down at some point. It went up higher on this wick at some point, but it eventually closed here, higher than the price that it opened at, the 4-hour window. We will be doing intense analysis on a lot of this stuff. So this is just a brief overview to give you a bit of an idea of what we're going to actually be talking about, because otherwise it's going to sound like Chinese. Now, we just put a nice little box across this 4-hour candle here, like that. So we can find it easily in our chart in a second. So when you scale down to the 15-minute window, you will find our box somewhere around here. There it is. So this box is what happened in that 4-hour window. You can see that we came down, we came back up, consolidated, and didn't really do an awful lot for the rest of that period. So the lower down you go, the more information you will receive. So there we go. We've got even more candles now. Because again, this is the 4-hour candle. We've split it into the 5-minute intervals. So that has just given us a better picture of what has actually happened in that 4-hour period. So when you're doing the analysis, you're trying to essentially look at this and figure out what price is doing. And this is why we need to have an understanding of what the higher time frame is doing before we get into these lower time frames, because a lot of this becomes noise, especially when you get to the 1-minute candle. And we don't really want to be getting caught out in all the racket, because now look, when we go to the 1 minute, there's a lot of candles here, and there's our time frame area. This is my first video, so you'll have to bear with me. I'm hoping that we can get a little bit of understanding. So you see there's a lot of movement here. So when we trade, we're using our high time frame to give us some sort of directional information, and then we're looking as we scale down in these time frames to find entries. And you'll see on my chart that I have these New York AM session, a New York lunch, New York PM, Asia, and red we have London. And now in our particular model, the PKM model, we trade in these zones. Lunch we do not trade. If we're not in the zone, we don't trade. We trade in our kill zone. That is because when big participators, banks, hedge funds, rich motherfuckers are trying to get into a trade, they'll be doing it inside that window. And we don't want to be getting caught in retail land where people that don't really know what the fuck's going on are trying to trade. And this is where we're getting into. It's a very complicated setup, but I tell you something, if you understand by the end of all this, what I understand, you'll see that you can make an awful lot of money out of it. Because if people tell you that price is driven by things like people buying and selling, that partially has some truth to it, but really it's an algorithm. That is what we look at. Every day, every pair does something that lines up with our model. And you'll not understand a lot of it as we go through at the moment. When we get into the sessions talking about liquidity, high time frames, candlesticks, looking at the recognition of patterns, liquidity sweeps are the way we look to trade. We look for session lows, which we call liquidity. That's basically where people have done this. So this is our buy tool. We've bought here and we want to put our stop, which is my orange box. And that just means that's the amount of risk I'm willing to take. Now, if we're in our trade here, a lot of retail traders will have their stops right around this level here, because that is what they have been taught by the books. And if you look here, price did go to go up. It's trapped people into a buy. But what it does now is traps people into a sell as it comes down. So where we've got our trade here and our stop loss here, because we're in around about here, we'll probably say we're trying to target this Asian session high. So we think we're doing fucking great. But what actually happens is price comes back down and it wipes out all of the retail traders before it actually does do its move. This is Christmas market data as well, so we're not really getting a full picture of how volatile markets can be when things play out the way that we want them to. It's difficult to get a grasp of it all in one go, so it does require you to spend a lot of time looking at charts. You need to ask yourself a lot of questions. You need to pay attention. Pattern recognition is effectively what we're trying to do here. So when we look at our model, we look for a direction. First of all, from our high time frame analysis, are we looking to buy today or are we looking to sell? What is the market looking like it's going to give us? So then we do our lower down analysis in here, and we look at the previous session. That's what we do. We look for a low in that session. We look for it to be swept, which means, as I just explained, it stops out people in positions so that the big banks can fill the large orders that they are trying to carry out, because this is a zero-sum game. And the way it works is somebody wins, somebody loses. You know, that's why you need to understand effectively what is going on here, so that you don't become part of the liquidity that offers rich people your money. We are trying to basically follow the algorithmic footprint and the big money, and we want to get in and out of trades in the same manner that they do. So we need to look for the traps. We need to understand what the market is trying to do, and we then hopefully can get ourselves in a really lovely position. And I can show you some fantastic trades that I've managed to take over the course of the last 6 months, especially as I fine-tuned this. And I'll tell you now, when markets are performing, so not inside holidays and weekends, obviously, we look like we're going to make a lot of money, which January should be good for. So once we actually look for this sweep that we were talking about, we then go into our lower time frames, and we are now looking for the session to tip its hat to us effectively. We want to see what has gone on. So where you've got the sweep. So here we have the sweep right here. And as price has moved up, we have broken our internal high, which means that we are potentially looking to change direction. So we want to see is displacement here, which is violent movement. You can see here, the bearish candles have violently moved down there. That's kind of what we look for. Here again, even though it's not in our zone, that is a form of displacement. It's where the markets move so fast because buyers are getting in that it hasn't had an opportunity to even fulfill any sell orders. So what the market tends to do is it will go up, and this is the retail trap. We're all in. We think we're good. Market comes back down. And what it does is it sweeps out liquidity and it fills what remaining orders are there, traps the sellers that didn't get a look in, say, in this area, and then it fucks off into the sky. And when we start making our trades, we would be looking, if this was a perfect situation for a fair value gap, and we end up getting in somewhere close to where the market actually taps you in, and we can then give ourselves a really tight stop loss. And you can see there, that says to me that we are 7.5 risk to reward. That simply means that the position size I have entered here has a risk of £100 effectively if I'm on a 1% 10k account. That means that if the market stops me out, I'll lose £100. But the 7.5, that is my win. So that means that I will get 100 times that. So we are £753 profit at the end of this trade. We will look at the proper charts in due course. This is, as I said, just a really brief rundown of some of what's going on, and get you a bit of get your eyes adjusted to looking at these charts, because it's very complicated. I mean, we have a similar scenario here. These wicks here are they wouldn't apply to us in this market to enter the way that it appears. But if you did look to enter, you'd be looking at this level here, putting in your Fibonacci tool to give you a idea of where price retracement is. Oh, look at that. That's our double mark there. That is our discount zone. Where has price come to? Exactly there. And because we know with this model, when we get the perfect situation to be able to enter, we don't need to have fucking massive stop losses like people do. We don't need to be risking. We can risk small. We can target levels, which is here. This is where stop losses will lie. This is liquidity. Or we can go deeper. We can go for the deeper liquidity. In this instance, we would have got it. But look at the sort of result that entry gives you. That's 20-1. That's fucking incredible. When you get these trades, even on a small account, you risked £100 there. You just made £2,000. So A+ setups deliver. These aren't A+ setups. These are just examples of what can be achieved. And when you start thinking about the scalability of, what money you can make here, your risk is always going to be applicable to whatever size account you have. So if you have a £100,000 account and you're risking 1%, you're risking £1,000, 20-1 reward. Well, you've just won 20 grand for one single trade. And it's there every day, all the time, every fucking time. Monday to Friday, 8 a.m., 7 a.m. UK time for London. You'll see it. And, you know, the first part is learning how this market works, which we'll be going through. The second part will be understanding the strategy. Once you've got that in your head and you understand how the system we're using works, that will be where you think you know what you're doing. But you need to hold up a second, because then you need to go look at the charts, forward testing and back testing, and really, really understand, so that when you see it happen, you just, I see it, it's coming. And it might look like you're catching a falling knife because price is going to come down to your entry and you think you're going to get fucked over, but you're not. Once you've accomplished that, you'll be onto your psychological side, which is where your brain's telling you to think more, but you need to act because you've done all the work. You know the move, you know the strategy. You don't need to talk anymore. You just need to hit go. You don't care if you lose, you don't care if you win, but you know what's going on. That is a very basic open entry to what we are talking about. Now, Christmas price action shit. So this chart right now is not good. But when you go into some of these movements, and that we'll go into the back testing, we will find good examples, we will find shit examples, we will find winners, we will find losers, so you can understand everything that does occur. Because we don't want to be those kind of traders. I see a lot of them, they give you half the information and expect you to go and trade. They want to charge you an awful lot of money for the very little they give you. And then in addition to that, they don't really care about showing you their losers. They just want to brag about how great they fucking are. And we need to understand that the market is going to give you winners and losers. It doesn't matter. We're professional losers, not gamblers. We know that we're risk managed well. So when we do lose, for example, 20 to 1 winner, you just made $2,000, but you lose 3 other trades. So you lost 300. So you still come out of that with a massive amount of profit, and that's fine. But I think when you understand the model and the markets effectively, the way that they should be read, you will find a lot of times you aren't losing. You'll be winning a lot. It's the refining of the entry. It's the little details. They are the things that matter. And it seems impossible, but I tell you now, with ADHD, my brain doesn't work like a lot of people's, and I have had a lot of hard work trying to sift through all of the shit to try and make something understandable. I've compared it in my book to glasses. If you need glasses, you can't just put other people's glasses on because you won't be able to see. You need a prescription for you, something that can make you see clearly. And that is all that this is. Every strategy out there is good if you can understand it correctly. I think this is a lot better. I think it's a lot clearer. I think it's very, very good on reward. So for now, we'll put a pin in that because this is my first video trying to explain things and it's quite tricky. But be sure to tune in again. Hopefully we can get a little bit more information out there for you, and that will be fantastic. Anyway, peace out. Have a good one.